Hello, everyone, and thank you very much for being at this session. I am delighted to introduce today's session titled Developing Behavioral Informed Demand-Driven Digital Services for Medium and Small Enterprises in Colombia. In this session, we are happy to bring together a group of esteemed partners and speakers who have collaborated closely to identify innovative strategies to address a key challenge that we face in fostering the development and growth of micro and small enterprises in Colombia. Our session is structured into three parts. In the first part, we will share key learnings and challenges that we all together, all our partners and the panelists today, identified through various studies and interventions across Colombia and Latin America. We specifically will focus on how micro and small enterprises can better overcome obstacles related to digitalization, including the use of digital financial services. In the second part, we will briefly discuss the specific needs that we have identified for financial service providers when they offer products and services tailored specifically to medium and small enterprises. But also, we will explore how income volatility, which is a major factor in the development of their businesses, often leads to exclusion from formal financial services and limit their access to digital solutions for these businesses. Finally, we will present a solution to these challenges that represents a significant step forward in advancing digital and financial inclusion for medium and small enterprises in Colombia. For this session, I am honored to introduce our panel speakers. We will have Verushka Silvetti, Country Manager at Fundación Capital, Hans Fresh La Rosa, Researcher at Common Sense Lab from Duke University, Luz Gomez, Vice President at MasterCard Center for Inclusive Growth, and myself, Luz Magdalena Salas, Vice President of ANIL. So without any more introductions, let's begin with Verushka. I want to hand it over to you. So if you can share the screen, please.
Thank you, Luz, and good afternoon to everyone. We will talk about the...
Sorry, Verushka, could you increase we're having trouble into listening to your audio.
Do you hear me now?
Yes, better. Thank you.
Okay, perfect. So, if we can go to the next one. Yes. So we will talk about the challenges of digitalizations and also the learnings from a project that we implemented. Next, please. Well, in Colombia, micro and small enterprises represent around 99% of all businesses. They generate more than 70% of employment nationally and contribute with 40% to the gross domestic product. In spite of this important contribution to the national economy, according to the Multidimensional Index of Microbusinesses Robustness, only 32% of micro-small enterprises are considered robust. This can be explained by several challenges they face that limit their growth and robustness, such as, for example, limited access to credit and adequate terms, also high volatility of income, which dificults liquidity management, not adequate accounting practices, because the majority of them do not maintain proper accounting records, and they usually keep financial records manually, which dificults access to credit, informality of transactions in the environment they work, weaknesses in their marketing strategies and sales channels, and last but not least, low levels of digitalization of the businesses. Most of these challenges could be overcome simply by fostering the digitalization of micro and small enterprises. Also, the challenges related with access to adequate financial services. And how? Next, please. Because digitalization facilitates access to new customers and new markets. It also facilitates access to new suppliers that may offer better conditions. It enables to have greater control over inventories, human resources, and in particular, over the finances. and this can in turn facilitate access to credit. And besides, digitalization facilitates access to innovative sources of funding that offer better conditions, especially now that the fintech industry is continuously evolving. Taking this into account, next please, thank you. Fundación Capital, with the support of the Mastercard Center for Inclusive Growth, developed Digital, which is an initiative that aimed at facilitating access and use of digital tools by micro and small enterprises that could help them increase productivity, contribute to economic recovery, and improve their financial health and security. This program was implemented in Colombia, Mexico, and Peru between 2020 and 2023, and it achieved remarkable results. Only in Colombia, we were able to reach 36,000 strivers who got access to more than 70 curated digital tools that were relevant for their businesses, and 7,700 of them started using digital tools on a daily basis. Besides, by the end of the program, 87% of participants were using mobile wallets, and 54% of them used it as a means of receiving payments, which facilitates the tracking of business transactions. Nearly 40% kept their accounts records in a digital system, and this for sure facilitates access to credit in better conditions. But next, please. How were we able to achieve the results? First, what were the key success factors that enabled us to achieve these results? First, to offer a wide variety of digital solutions that were able to respond to the diversity of needs that micro and small enterprises have, depending on different characteristics such as age of the business, location, maturity, among others, and also to provide concrete and practical information on these solutions so that they could easily adopt them. Another success factor was the use of a high-tech and high-touch strategy to foster the adoption of digital solutions among strivers. We combined the use of massive digital channels with personalized support in the field from different people. Among the digital channels that we used, we have first social networks, in particular a Facebook community named Growing My Business, where we provided practical information about digital solutions that were relevant for the businesses and how to use them, as well as relevant information and practical tips for the business growth. We also use Connector, which is a chatbot developed by Fundación Capital that works, where we provided also similar information about digital solutions. And we also used Red Nodus, a web platform developed by Fundación Capital that works as a kind of Trivago of digital solutions for micro and small enterprises. It enables users to easily access to digital solutions that respond to specific needs in areas such as financial services, suppliers, etc., based on their location, taking into account also their location. Personalized support was provided on one hand and mainly by our digital ambassadors, who are local leaders that taught their peers which digital tools could be relevant for their businesses and how to use them. And we also worked with partners from the public and private sector, as well as international cooperation agencies that were already working with micro and small enterprises and helped us fostering the adoption of digital tools among the participants of their programs. Well, all the learnings that we gathered through this program constitute the basis of a new initiative that we recently started and that Luz Gomez will introduce to you in a couple of minutes. Now I pass the floor to Luz Salas. Thank you.
Thank you very much, Verushka. I am really happy and excited to be able to share some of the findings of this study, the Small Firm Diaries study, and what were the main challenges of the study that we encountered. But first, let me tell you that these findings, this study or this project, was an important, or is an important global research initiative that was led by the Financial Access Initiative from NYU. And as I was trying to explain, the goal of the study is to understand the financial realities of small businesses in Colombia and other countries, of course, but Colombia was one of the 7 countries that was in the sample of the study. And the idea was to understand the main barriers that small firms in these countries face in order to grow. And as you in the audience may know, one of the main barriers for growing for these type of firms is access to finance. So what we would like to, what we would like to do is to learn from the findings of the study how, by understanding the realities, the financial realities of the firm, or the firms or these small businesses, we are able to understand and to better address the gaps in financial inclusion. So let me give you a little bit more information about the Small Firm Diaries study. As I said, it was a global research initiative providing insights into the financial lives of the small firms. And as I also mentioned, the idea initially was to enhance the growth capacity of these firms in Colombia and the other countries through digital tools adapted to specific needs. So what we're going to be learning, or what we bring, this study brings to the project that later on we're going to explain, is that information is a key driver of reducing or closing the gap between the supply and demand of small firms. But so, as I mentioned before, this was a study conducted in 7 countries. One of them was Colombia. We examined the financial lives of nearly 800 firms in these 7 countries. And what we did, or what the study, Small Firm Diaries study, does, is gathering detailed weekly data, financial data of these firms. In this slide, what I want to show you is, so we had in Colombia in particular, I think I didn't show it to you here, but here we have the information. We had approximately 122 firms. The data collected in Colombia was between May of 2021 and May of 2022. We visited these firms every week, and we collected not just data about their financial situation, but also the relationship or the situation with their employees, with the competition, with the providers, etc. And so all this information, we use it for understanding what were the main challenges to grow. And one of the first things that we observed is the high volatility in the cash flows of these firms. In these pictures, or these graphs, show you situations or the lines of the we capture here revenues and expenses, and we also calculated the operating margins across these businesses for each businesses across 1 year of gathering information. What we observe here in these 2 different types of businesses is that firms experience high volatility in their revenues, in their expenditures too, but especially in the revenues and of course in their operating margins. And we believe that this is one of the key insights, because firms experience significant income volatility, and this income volatility affects their decisions, the daily decisions, and the decisions in particular to, makes it, this uncertainty and this high volatility and uncertainty makes it difficult for these businesses to consistently meet their financial obligations. And this is one of the main challenges that we try to face in this project. Also, we started studying, okay, what type of investments and when they have experience with formal financial services or with loans, and when they require financing, what is the use of those funds and what is the source of those funds. And what we observe in this study and in others is that their investments, what they call investment, or the use of loans, are mainly to purchase raw materials and operating capital. So most of them, in more than 80% of the cases, they use their funds to finance working capital, while capital investments, that type of, or the use of funds or resources that leads them to grow and to increases in productivity, is not particularly the most the most frequent need that they require for the capital. And when they experience situations or needs of working capital and capital investments, as we observe here, 80% of the times when they require working capital, they go to informal lending, and only 20% they use formal lending. This situation changes a little bit when they use the funds for capital investment, in which 60% of the cases use informal lending, or and in 40% of the cases go to formal financial products. And this definitely explains the large gap that we observe and that there exists, and that you, as experts in financial inclusion, may know this big gap or large gap between the supply and the demand. But let us now, or let me try to describe three of the main implications or effects of this income volatility. And what we encounter in this study is that income volatility may cause entrepreneurs to doubt their ability to meet the regular payments. And that is one of the, let's say, main fears or reasons that prevents them to accessing or going to the formal financial sector, or formal financial service providers to ask for loans for their businesses. And in particular, this fear is to not being able to make the payment deadlines, and quantitatively we present that in the study, and also qualitatively, in particular when in those periods, if you remember the graph that I showed before, in those periods in which their income was low. But another reason is that I'm going to show you some additional information in a second, but given the high volatility that they experience, the priority often focuses on maintaining stability. No, they need to cover their daily expenses. They need to maintain it and stabilize their businesses before even thinking about making investments into growing into growing or increasing productivity. So this is the second implication of this high volatility, and is that their decisions, everyday decisions, are often focused on maintaining or stabilizing the business, and that's also another important implication of this high volatility. Finally, as I try to explain with this chart in the right hand side of the slide, when they require financing, usually what they do is that they their needs are related to working capital, as I said, and their main source is informal lending. So this creates a significant gap, as I mentioned before, between the supply of financial services and the demand for accessible and flexible options. And let me just address this word, flexibility. This is something that they are seeking. Flexibility is something that micro and small businesses that experience a large periods or high volatility are seeking in order to stabilize their businesses and growth. And an additional piece of information and key finding that we find the key finding from our study is that is a question, because we asked entrepreneurs about their aspirations for the short and medium term. And what we find here is that they usually prioritize stability over growth. If you observe this, 58% of the businesses, at least in Colombia, prioritize stability over growth. Only 42% of them mention that the main aspiration is growing in profit or in the number of products sold, or diversification of products, or increasing in the number of locations that they have for their businesses or employees, etc. But that's not their main challenge. So the main one of them, and in particular in Colombia, when we combine both reasons, growing and stability, 73% of the small firms respond to it. Finally, what we do with the data from the study, from the study, is to construct these profiles. And why we believe that this is important, and this is going to be an important source of analysis for this project. The point is that we need to serve the needs of the small and medium enterprises. For that, in order to do that, we identify 5 profiles, distinct profiles, based on their behaviors of these small firms and the challenges that they face in terms of digitalization, in access to credit, formalization, etc. So we have defined these 5 profiles: a low-risk operator, or an emerging entrepreneur that is eager to start using digitalization but is behind the use of digital financial products or non-financial products, a resilient and adaptable entrepreneur, or a traditional entrepreneur with digitalization potential, so he's already starting using digital products or services, but still needs some, help in using these products, or the digital innovator who is an entrepreneur that has more experience in digitalization. And why we believe it is important? As I said before, the world of micro and small enterprises in countries like Colombia, but globally in general, are completely different, are different worlds who have different challenges and behaviors. And we definitely believe that we need to understand these profiles in order to allow financial service providers to design tailored or specific tailored solutions that address the unique differences and needs of each specific groups. And we believe that by identifying and separating the needs, or identifying the different needs, we are able to thrive the digital economy in small and medium enterprises in Colombia. So with that main results, I would like to welcome Hans, Fred, La Rosa to talk us a little bit about their experience in Common Sense Lab in behavioral sciences, and how these responds to income volatility challenges for small and medium enterprises. So please, Hans.
Great, thank you very much, Luz, for introducing some of the results of the Wolfram Diaries, and Virusha for talking about the findings from the digital experience. And as Luz mentioned at the beginning, the goal with this Stive Colombia initiative is that we partner and we work together as different types of organizations and with different sort of like approaches and frameworks that can complement each other and help address the challenges that MSEs have. And so what we bring at from the Common Sense Lab at Duke University is a behavioral science approach of income volatility. You all probably have been imagining how these small businesses' income sort of like fluctuate on a month-to-month basis, how incomes go up, expenses go down, and there's a lot of sort of like change from one month to the other, from one week to the other. And if we go to the next one, what we've been finding in the literature and the research is that volatility is also a behavioral challenge. That volatility has both behavioral decision-making implications for the people who experience it, and also will have an impact or can have an impact on the financial decisions they make, and ultimately on their financial well-being, resilience, and stability, as Luz was mentioning. One of the first things we find, and the research on uncertainty more generally and specifically on income volatility has shown, is that when people face income volatility, it reduces people's perceptions of control and predictability. We are less likely to feel like we're in control of our finances, in control of our budgets, and we are less likely to predict how our income will be next month, what our expenses will be. And that sort of like makes it a lot more complex for us to then make any sort of like planning and business related decisions. And when low income households, small businesses face these challenges, what research that look into their actual behaviors find is that they tend to make more short-term expenses, of have a more narrower short-term focus in terms of what decisions they make. It's more likely that they'll be focused on solving for specific issues happening in the short term, the next month or so, and less likely to make plans and make decisions that benefit them in the long term. And there's also less money that goes into savings. They're much more likely to spend that money in the short run, invest it in the short run, but less likely to have money in savings. Even though it could be helpful for them to have some cushioning in order to prevent any of those other ups or downs in the future. Um, and the second element we found in the research is that one of the characteristics of income volatility, or one of the causes of income volatility, is financial shocks. And we are all sort of like exposed to and vulnerable to different financial shocks, whether it is a loss in income. Many of these micro and small businesses experienced that loss in income during the pandemic, for example. Businesses had to shut down, people were consuming a lot less and going out a lot less. So that generates a natural income shock for small businesses. Suddenly, my income, with little predictability that they have, but suddenly that income goes down, and they have to deal with those shocks. No? Or a machine breaks down, power goes out, and that causes sort of like an expense shock that they need to find money to cover for. And as Luz has mentioned before in Findings from Diaries, those expense shocks and those needs for capital usually lead to more informal capital providers and more formal ones, and that generates another set of challenges. And from a behavioral perspective, what happens is that those financial shocks can trigger what's called the scarcity mindset. A scarcity mindset is a moment in which we have a particular resource that we feel is scarce, and that focuses our attention and all of our cognitive bandwidth into solving for that particular scarce resource, whether it's money, whether it's time, or it's space. Um, and that has both a positive benefit and a negative consequence as well. The positive benefit is that we focus all of our attention on solving for that particular scarce resource. We're very likely to find a solution and find ways to solve for it. But the consequence of that is that we then, because we focus all of our attention and cognitive effort on it, we neglect other things that are happening on the sidelines. We neglect sort of like thinking about the long term and the future, because we're solely focused on solving for that issue in the short run. No? And what that translates in terms of financial behaviors and financial health is that people are much more likely to take higher risks, to find sort of like take higher risk, particularly to prevent a loss or prevent sort of like any more negative impacts into their business, and also are more likely to get into debt. No? And one of the reasons for that is they might be more likely to take loans that are more expensive, more accessible in the short run, probably. They have a lot less friction, but also more costly for them in the long run. No? And ultimately, sort of like that can also be impacting other aspects of their business and other aspects of their financial lives. And finally, one of the other elements that we found that income volatility is associated with is with financial worriness. People who are experiencing income volatility, who are less likely to predict their income, who have a lower sense of control over their finances, are more likely to also worry about sort of like what's going to happen, and that poses a health toll for them as well. There's evidence that has shown that when pay volatility increases, when those changes are much more sudden, people worry more, and that generates problems with sleep, more stress, other related health issues associated with the reduced sleeps and increased anxiety and stress. And that can ultimately translate in even more expensive is sort of like an entrepreneur has to stay out of business to recover from a particular health issue, and it creates a whole cycle that makes it more difficult for them to address their challenges and to achieve that stability and growth that we was mentioned before. And so, well, if we move to the next one, what sort of like we found as well is that there is an opportunity to address these challenges in Latin America. We've been doing some work over the past few years with independent workers, with small businesses and entrepreneurs. And what we see is that there's an opportunity to change how the products and services that these small businesses are using can help them manage these challenges better and address some of these behavioral barriers and challenges that I've been describing before. No? We know that financial organizations, and we've seen it in working with multiple of them in the region, they value solutions that benefit their users and are aligned with their business goals. So you have a unique opportunity to identify those midpoints between what's going to help and continue improving micro and small businesses' income volatility and financial challenges, but that can also be a sustainable business solution for organizations so that they can continue to operate and scale and maximize that impact. We also know that MSEs are diverse and dynamic. Luz was mentioning all these different profiles that have been identified for small businesses. So understanding that heterogeneity in a region that's diverse and unique as Latin America is also an opportunity to find how can we tailor and differentiate sort of like solutions so that they benefit MSEs even better. And lastly, one of the great benefits of this Strive initiative is that by working with multiple stakeholders, both the organizations that were here on this panel, but also local organizations, financial organizations, associations, we want this to be an opportunity to create those networks and continue impacting MSEs in the long run. And the main change that we want to bring from the Common Sense Lab perspective is we want this to be an opportunity to move from what traditionally has been the approach to helping people address financial challenges, which is giving them more information, informing people. We know that MSEs are already sort of like dealing with limited attention, dealing with reduced time, and struggling with multiple challenges. So we want to move from informing people to changing the context in which they are operating. And that translates directly, if we move one more loose, please, that translates directly into designing better financial products and services that can simplify and make things easier but better for MSEs to deal with these different financial challenges that they are experiencing. And if we move to the next slide, I just want to show two examples of how we've done this before with other organizations in the region to give you all a sense of what type of impact this approach can bring and what are the opportunities when working with financial organizations. No? So we basically can divide this sort of like redesign and innovation in terms of financial solutions in two big buckets. No? There's an opportunity to improve what's already been organizations are already doing. In this first example, the one on the left with Mercado Libre, we worked to redesign some of the communications that they were using with their micro and small business users in order to increase access to affordable, better, and more impactful credit solutions by connecting multiple sources of fundings that they have, giving Mercado Libre more visibility about the financial lives of MSEs as a way to increase credit access by improving their risk profile. And the only change we did in this particular scenario is we reframed the communications to highlight that MSEs were very close to completing sort of like to completing the setup of linking an additional account. That's one thing we call completion bias. When we're very close to completing something, we make an extra effort and we feel much more the urgency to complete that particular setup. So by reframing communications in that way, we managed to get MSEs to link an additional account, give Mercado Libre more visibility about their finances, and eventually get access to credits that could help them manage their business better. This change in messaging almost doubled the effect that a traditional business as usual message had from Mercado Libre's time phone at a very little cost to the organization, doubling sort of like the impact on the number of MSEs who also got access to an additional source of funding. And on the other end, with Gliver, which is a fintech in Chile that works particularly with independent and gig workers, what we did was we designed a completely new feature that they had identified could help their users save more. So users had access to a digital account through Gliver. They could receive their income, make payments in a single digital account that was very easy and had no fees to the user. But they realized that users didn't have an opportunity to save. And one of the things we've learned and behavioral sciences have learned can help people save more is separating funds into different accounts. So with them, we designed an additional savings pocket linked to the same account, again with no fees, very simple to use, just to move funds from one account to the other one, separating them and attaching them to different savings pockets that they have. And the most impactful intervention we designed and tested with them was rather than giving people the opportunity to create that pocket if they wanted to by giving them a button they could click to activate it, we created that savings pocket by default for some of their users. And what we saw is that it also basically doubled the percentage of users who had access and eventually started using that savings pocket. So small interventions informed by behavioral science, such as creating a feature by default rather than giving users an extra step to create it, can increase the usage of these features that can eventually help them also manage their income better. And that's what we want to do as part of Strive with behavioral science. We want to identify those opportunities to improve and redesign some of these financial solutions so that they can end up benefiting MSEs more. And with that, I think Lucy is now going to share with us some of the specific needs we've been identifying and how we plan on addressing them.
Super.
Thank
Thanks.
you. Go ahead.
No, thank you so much. All right. Well, first of all, thank you to our partners in this effort for sharing these really valuable insights. Luz, did you have a couple more slides that you wanted to go over before we head
Yes,
off?
yes.
Perfect.
Yes, Luz, briefly, just trying to explain which are the specific needs, because as Hans and Berushka and I presented in the results of the studies, we have different challenges, but we would like to take your attention into two particular challenges. One, for financial service providers, we see that we've encountered an underexplored opportunity to enhance financial services for small firms and for micro businesses. And the challenges that we identified for FSPs are various. One of them is in terms of, is the lack of data for risk management. The second one, and of course, you will have access to this presentation and more details, we're happy to comment, but given that we are running out of time, I would like to briefly mention this. The second is related to product design alignment. If FSP, if financial service providers are able to identify the cash flows as we presented and the heterogeneity that Hans was mentioning and that we plan to provide with different profiles. What they have identified, Fundación Capital has identified through digital, we see different types of needs for MSEs, and with this information, we were able to present it to financial service providers so that they are able to design products or design financial products that are targeted towards these specific needs. So that is another challenge that we hope to address with this project. And finally, the access to unavailable data related to that heterogeneity that I was mentioning, but also related to the dynamics of the businesses and as you saw with the results of the small firm diaries, that they experience high volatility and situations completely different. But also businesses face critical challenges. They are as we mentioned, also probably they need to share information. Sharing information for them is a challenge. They do not have credit histories, or the information that they have is with informal providers that is useless for formal financial service providers. But they have data. They need to be able to be visible for financial service providers, and that's one of the main challenges, but what we expect to address in this project. The second challenge is related to the design of products. I also mentioned, and all of us have mentioned in different moments of the presentation, that we need to create these tailored financial and non-financial, but digital services and products specifically to address this income volatility and to help them grow. So with this project, we're going to be able to promote digital tools, the use of digital tools, and we're going to try to design pilots in product innovation. And finally, provide data in order to help them improve the management of the liquidity. We see that our partnership with suppliers, and I think there was a question in the chat, our partnership with suppliers or financial institutions will help us identify alternative tools that can also help these businesses improve their visibility to the banks and the financial service providers and to manage the liquidity. So with this, Luz, I'm happy to to give you the floor.
Perfect. Thank you so much, Luz. My tocaya. So again, thanks so much to our partners for sharing all these insights in a very quick moment. I've put a couple of links in the chat to read more about some of these initiatives. But their contributions have really been and are critical to shaping what we're calling Strive, which is a global program run by the MasterCard Center for Inclusive Growth. And really building this program around this issue of digitization for micro and small businesses, as well as to help mitigate challenges like income volatility that you've been hearing about. If you can go to the next slide. And our objective really, and hopefully it's rang a bit more clearly as we've gone through these presentations, is that we're embarking on this new initiative. And what we want is that digital financial services to truly work for those small businesses. And that means focusing on measurable outcomes. That means focusing on ensuring that they align with real world business experiences. You want to hear from those businesses themselves. And then also leveraging innovative tools like some of what you heard from Common Sense Lab around behavioral science, around how do you drive meaningful improvements in financial well-being. And you can go to the next slide. And this is a cross-sector effort. This initiative will go, we just launched publicly a couple of weeks ago, but this is really fundamentally a partnership effort that spans the public, private, and social sectors. And together, what we will not only provide access to these digital tools that we've been talking about and financing, but also offer the necessary training and support to help guide businesses through their digital transformation so they can continue to be effective and efficient. Our partners' expertise in these different areas is really crucial to ensuring that there's, again, smooth and an effective journey for these small businesses. And, we've learned a lot, since the onset of the pandemic, as you heard from Varushka during our program Digital, and based off of those lessons are sort of, continuing to build upon this work. You can go to the next slide. But, again, small businesses are one side of the equation and a very important side of the equation. But nonetheless, the providers of those digital financial services and digital tools are another key part of that equation. And so, as our partners have really highlighted, particularly Luz from ANIF and NYU, it's essential that we don't make assumptions about what the needs of small businesses are, that we're building off of the work from Small Firm Diaries. I also put a link in the chat to some of that initial work that Luz will be continuing to build off of, but that we share these actionable data with providers, allowing them to better understand and meet the unique needs of various small business segments. And Luz gave you a snapshot of some of those typologies and profiles that they're building around micro and small businesses. And you can go to the last slide. And so looking ahead, again, our ambition is to do a bit of reimagining for small business digital and credit solution. We're going to be working with Hans and the Common Sense Lab team in collaboration with Luz and ANIF and the NYU team, as well as Fundación Capital. And they're going to be engaging, and they have been engaging with a broader financial service provider community, and obviously leveraging the MasterCard network as well, to rethink how we approach small business credit products. And it's going to run the gamut, from the creation of toolkits to workshops to working groups. We'll be supporting the design of solutions that really try to meet the evolving needs of small businesses. And so that's the ambition. It is a vision that is quite ambitious, that we're going to be driving over the next couple of years. And we're really excited to see these efforts take shape. I'll put in the chat as well a little bit of information around the Stive Colombia initiative, and we look forward to continuing to learn more. And please engage with us. So back to you, Luz, so you can close us out.
Thank you, Luz, and thank you again to all of you. As we put here, our aim or the main objective of this project is to help identify which actions we should start implementing to drive the digitalization of medium and small enterprises and how to help them mitigate the impact of income volatility. So with this, I close this session. I thank, of course, our panelists, Hans, Verushka, Luz, and all the people that are connected and that were listening to our presentations. Thanks, Diana, for your comments and questions. And if you have any more questions, we are really happy to to do follow-ups, I don't know, calls or emails with you. Thanks to all of you.